I mean, I think we've had a very good start to the year. So stock markets, as you've been pointing out, we've seen strong European markets, we've seen strong US markets. And I think Davos was a very positive affair. I mean, people were concentrating on lower energy prices. They were also concentrating on several other positive issues around China and other such areas. But I think that we need to build on this. And I think when I say build on that, we need to deal and address inflation, which for me remains enemy number one. And with inflation at 10.5% in the United Kingdom, when you lift the bonnet on that, you see some pretty troubling areas. And I think that's what we need to do. And it's about the choreography of how you move rates, deal with inflation without negatively impacting the consumer and negatively impacting the economy.
Is the consumer the problem here? Because if you look at various economies, you still see overspending, these long COVID trends where people are just spending more than they traditionally have in the past, which seems to be sustaining inflation. So is the consumer the problem here?
I think inflation's the problem. I mean, if you look at 10.5%, if you read what the ONS had to say on that, so you are seeing things like food. So food and non-alcoholic beverages was a major problem. So we've seen 17 months of hikes in prices in food and non-alcoholic beverages. We haven't seen that since September 1977. And so that for me is a major issue. So that is what the cost of living crisis is about. That is about the price of eggs, the price of butter, the price of milk. And that's not just feeding into the consumer, it's also feeding into the corporates. And I like to listen to what people like the CEO of Black Sheep Brewery is talking about, the CEO of Brompton Bicycles are talking about. This, it's a very difficult time. And though we have some good optimism in the system, and there's been some good surveys out, we have to deal with inflation. And the choreography of that is very challenging.
In terms of the factors that are causing that inflation, these are addressable issues on the back of higher interest rates, are they? Because the fear is, of course, from some of those who still, and we have one or two analysts, economists, who still believe it's transitory, that actually it's out of the control of the central banks. It's about supply side issues which are now abating on the energy side as well. But as far as the Black Sheep Brewery proprietor is concerned, and the gentleman from Brompton Cycles, both brilliant companies, they think this can be addressed by higher rates then, yeah?
Yeah, I think this is one of the key ways you deal with inflation is you raise rates and you slow the economy down. But if you look at UK inflation, there's an additional part to it. I think it's a more virulent part to it than perhaps the rest of the world, where not all inflation is made the same. So you have a tight labour market. A lot of the world has a tight labour market. Energy prices, well, we've discussed that, and energy prices have come down. But Robinson Brothers, this fine chemical company, says their energy bill's up 3 times. So it's still an issue. And then I think the third part of the inflation part that I think is worse for the United Kingdom than for many other countries is that when you look at the dislocation in the supply side, i.e. how we deal with Europe, how we deal with the rest of the world. And that's the additional part. And I think that Hugh Pill made some very interesting observations on that. That's why the United Kingdom has one of the worst inflation pictures in the world.